fancy schmancy testing without without the microphone on, which is embarrassing. Okay, let's go. So here we are, the Naked Trading webinar. Glad to have you here. Welcome to all the traders here and also those who are watching the recording, of course. Thank you for attending the Naked Trading webinar. My name is Walter Peters. I'm a full-time trader, psychologist, wrote the book Naked Forex. A lot of my strategies are there. We're actually writing another book now. We're just getting the stats all set for those systems in the new book. So that's kind of exciting. And what we're going to talk about today is interesting. This is the I guess you would say like the beginner's course, like, you know, how to get started as a naked trader, I suppose. So let's start with this right here is a buy setup, by the way. This was a buy at 70 and it's at 99 right now on the Euro Kiwi. The reason I didn't take it was because for targeting up here at 61.80, 61.75. The reason I didn't take it is because I just don't like getting into trades the day before non-farm payroll. Maybe that's a mistake. Maybe I should revisit that because the non-farm payroll is definitely not what it used to be. But let's start from scratch. Let's find a chart. I kind of don't want to use the euro just because it's so boring. Which pair should we use? Anyone have any ideas? Shall we go with something exotic like the USD Hong Kong dollar, or something a little bit more middling like the euro yen or something? Let's try the euro yen. So what we're going to do is we're going to build a trading strategy from the beginning. Like, you know, how do we approach trading, I guess, is the question. Now, what should we do? If you have no idea what you're doing and you're just getting started and you think, you know what, I like trading without indicators. It makes a lot of sense to me to not have a lagging indicator on my chart. Then that's what we're talking about today. So let's talk about, it's amazing to me that the gap never closed last week. That's really interesting because that means it might not close for a long time. So here we are on the weekly chart, and I'm going to trade the daily chart. Let's say I have a job. I've got a lot of commitments, so I don't really want to sit in front of the charts for 4 hours a day or whatever outside of my job. So what I'll do instead is I'll throw up these jiggly lines, which is simply the weekly euro yen chart. And what I'm doing now is I'm drawing these lines on here, these horizontal levels, where I see obvious support or resistance. So you can see support, resistance, resistance. It was resistance again. It broke through, came back down, and once it broke through, it came back up and retouched it here, which is a very common move. You see it did again, that same thing here. It broke through, came back up and retouched it there. My friend Dennis, that's his whole trading system. That's it right there. Breaks through support, comes back up, touches it as resistance, and he sells off of that. Now, I don't know. He might have been stopped out on that move up. Yep, he would have been stopped out on that move up most likely. But that's the way that he trades. So there, and you know, people who trade like that, that means you're in good company. You know, you come from a long line of traders who trade that way. There are a lot of traders who trade in, you know, the method that I just showed you and derivatives of that, basically. All right. Don't let anyone tell you that hedge funds only do this or pro traders only do that. That's a really limiting belief to say that all hedge funds do this or all hedge funds do that. You know, it's like, you know, like saying all smart people do this or all smart people do that. You know, it's just not, it's not true. It's not true. So you get to trade any way you want. And let's say you have a job, as a person with a job, it makes a lot of sense to trade the daily charts because there's not a lot of babysitting involved. Also, if you have addictive tendencies and you know who you are, then that's another reason to not trade the lower time frame charts, because you don't want to activate your nucleus accumbens, because that's such a fancy word. I'm going to write it up on the screen. So nucleus accumbens is that area of your brain that's activated during sex, when you take drugs, when you're gambling. Um, there's actually a Parkinson's drug for people with Parkinson's disease, which is a horrible disease, but that drug makes you become like a crazy gambler, which is weird. Because and the reason why is it's activating this area of your brain. So, these sorts of things um, all play into your decision as a trader to trade naked, and you want to trade the daily chart. So, we're going to go ahead and put all these zones up here. And remember, this is the weekly chart. So, as soon as I go down to the daily chart, they're going to be much further spaced apart. Okay. I know we've got several that are really close, but even though they look like they're close, that's 200 pips. And then they're all about 200 pips in this little area right here apart. Okay, so now I'm going to go to the daily, and now I'm going to back it up, and now we're going to see where we're at. Okay, so there are some opportunities here to draw some more, most likely here. Yes. And then also I think there's going to be some in here. Well, certainly there, and then certainly here. All right. So that's step one. When I'm getting started as a naked trader, the first thing I need to do is draw my support and resistance zones in there. And the way that I do that is I go to the higher time frame. Everyone cool on that? Does that make sense? All good with that? Awesome. All right. Now, the other thing, okay. So that's the first part, is you get your support and resistance levels in. And as a naked trader, what I do is I wait for the market to, and you can see what is happening on the euro yen right now. The euro yen is fast approaching the 123.33 zone. Now, if you look at my actual euro yen chart that I use every day, that's this one right here. It's at 123.43. Okay. So I've got my zone drawn at 123.43, and I got my little down arrow there. Not because I'm going to sell when it hits there, but I might. The reason why that down arrow is there is because I have to be alert. Now, what did I actually draw in here? Thanks, Kim. What did I draw in here? I drew at 123.33. So it was a 10 pip difference. Does that mean that one chart is right and the other one's wrong? No. Does that mean that if I drew it at 43 that I missed it when I drew it at 33? No. Because these levels are like big fat beer bellies. Okay. Where does the beer belly start and where does the beer belly end? If you've ever been like like an amusement park or something, or some crowded place, like a concert or something, and your hand kind of like you're in the crowd and you accidentally push somebody. Or you push off of somebody, or you bump into somebody, and let's say your hand bumps into somebody and this person has a big beer belly. Well, some people, when they touch the beer belly, their hand is actually gonna push into the beer belly before they realize what's going on, because they're distracted, they're dancing or talking to their friend or whatever, and then they pull their hand away from the beer belly, right? And some people won't do that. Some people will, as soon as they touch somebody, they just pull it away real quickly. Oh, so sorry, whatever. And that's kind of like what these zones are like. So even though I know that we're in the vicinity, we've peaked out at 123.20 on the euro yen. We may see a reason to sell when it gets up there and goes another 20 pips or so. And if that's the case, maybe I will take that trade. But here's the thing. As a naked trader, I first identify my sweet spots where I'm thinking, okay, yeah, I'm going to take a trade. These are the spots I'll take a trade. I know Kim is following me. Yep. So, and then I wait and see, where's the clue? What kind of clue do I get? So number one, higher time frame support and resistance zones. Okay. Number two, number two is wait. I wait for the market to hit these zones. And number 3 is do I get a catalyst? Catalyst, I think it's catalyst. Yeah. Now I know catalyst because I know the term catalyst because as a surfer, when I was younger, and I didn't care about brain cells so much, I would fix my own surfboards. And the way you fix a surfboard is with fiberglass and resin. And so if you get a damaged, they call it a ding, if you ding your board, you need to put resin and fiberglass. You need to put fiberglass on the part that's been destroyed. Your ding on your board, and then you need to put some resin in there. But you just can't pour resin on the fiberglass because it'll be really sticky. You want it to harden, and the way that you get it to harden is you put a few drops of catalyst in there and you mix it up with the resin. That's what makes the catalyst, or that's what makes the resin go hard. And then you have a few minutes to kind of pour it on there. You could put it in the sun or whatever, and then the sun works as a catalyst too sometimes, depending on the resin, and it hardens. So it's really, it will just stay sticky for a long, long time if you don't use a catalyst. The same thing here. If I just take a trade solely because the market and decide that I'm going to sell here, simply because the market's coming up to a support and resistance zone, I don't know that it's gonna reverse here. I don't know. It could come up here, sit here for a while, and then break higher. Okay. And so that's why number 3 is so critical. People sometimes think that support and resistance trading means waiting for the market to approach a support and resistance zone and then just going, oh, it's here now, time to take a trade. No, it's really more about what the market does when it gets there more than anything else. It's not where the market is on the chart. It's where the market is on the chart, and then what does it do part of the chart. That's really what naked trading is all about. And so I want to just be really clear on this because I think sometimes people have misconceptions about what naked trading is. And to me, naked trading is all about finding the sweet spots on the chart and then waiting for the patterns. Okay. Now, I will admit that it's going to be easier for you to do some sorts of trades and not others. What do I mean by that? I'm going to give you a quick test. Okay. I'm going to do a quick test here. I'll tell you what we'll do is we'll get the pound CAD here. Okay. This is the pound CAD weekly chart. Now what I want, it's actually a horrible chart. Let's use a different one. Okay, let's use a different chart. This chart's awful. It's not a good example of what I'm looking for. So okay. All right, let's do this one. This is the New Zealand dollar. Okay. Actually, you know what I'm going to do? I'm going to kind of move this. I'm going to move this off, and I don't want you guys to see it. The only reason I do that is because I don't want to mess with I don't want to make this too easy on you. Okay. Let's say that you're watching the chart here, okay? And you see the market's going up, pause, up, retrace, up, pause. I want you to be completely honest with yourself. And when you see this chart right here, when you see what's going on right here, do you think that you would be more likely to buy a market that's doing this,